Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Welcome to my channel, guys. Hello, I'm Nela Sakila and I'm from Tasga Institute with name 221010 and 40. Okay, and this video I want to explain about basic principles of insurance in subject Management of Islamic Insurance. Okay, for basic principles of insurance, the basic principles of insurance must be met when the insurer and the insured, in this case, are the insuring party and the insurance company enter into an insurance agreement. And these basic principles must be met. What are the principles? Okay, let's see. 1. Utmost good fight. 2. Insurable interest. 3. Indemnity. And next, subrogation, co-insurance, contribution, chronology, the law of large number, and the last, proximate causa. Okay, for the first is utmost good fight. What is utmost good fight? Okay, this principle requires both parties to the insurance contract, the insured and the insurer, to be completely honest and open. For example, the prospective insured must honestly disclose health condition or risk related to the insurance object. If the prospective insured doesn't provide important information or cancelment, the contract can be cancelled by the insurance company. Okay, for the example others is if a prospective insured keeps a certain disease secret then that can affect the insurance risk, the insurance company has the right to cancel the contract after learning this information. Okay, next, the second, insurable interest. This principle requires the party insuring the object to have a financial interest in the object. This means that the person will suffer financial loss if there is damage or loss to the insured object. For example, if someone insures his car, he has the right to claim compensation if the car is damaged. However, if he has sold the car, he can no longer file a claim because he no longer has a financial interest in the car. Okay, next, for the third is indemnity. This principle ensures that the insured only receives compensation according to the actual loss and no more. Insurance should not provide profit from the loss experienced. Okay, for the example, if the market price of the insured car is 100 million, then if the car is lost, the insured will only receive compensation of 100 million, no more. And the fourth is subrogation. This principle gives the insurance company the right after paying the claim to replace the insured in suing a third party who caused the loss. For example, if you have an accident due to the negligence of another driver and the insurance company has provided compensation, the insurance company can sue the driver to compensate for the loss. Okay, next is 5, co-insurance. Okay, when an object is insured by more than one company, each company will bear a proportional portion according to its contribution. For example, if a house worth 200 million is insured to 3 companies with different contribution, PTA for 100 million, PTB for 50 million, and PTC for 50 million, then if a fire occurs, Each company will pay according to its proportion of contribution. Okay, for the next is contribution. This principle applies if one insurance company has paid the claim in full. Then the company can request contributions from other insurance companies that also cover the same object. For example, you insure a house with 3 companies. If one company has paid the claim in full, the company can request contributions from the other 2 companies based on the portion of insurance they cover. And the next is chronology. This principle stipulates that the company that first closed the insurance policy on the same object must pay the claim first it lost accounts. Okay, the next is the law of large numbers. This principle is used to estimate the possibility of loss. The more similar objects are insured, the more accurate the risk estimate can be made by the company. As for the example is, life insurance companies use mortality data or death rates to calculate life insurance premiums based on the large number of people with certain age and health condition. And for the last is proximate cause. This principle determines the main cause of the loss that occurs. The goal is to ensure whether the cause of the loss is included in the insurance coverage. For example, if someone has an accident due to driving at high speed and the accident causes serious injuries or death, then the main cause is high speed. The insurance company will check whether this condition is granted in the policy or not. Okay, these principles are important to ensure that insurance contracts are fair and transparent. Okay, for the next is reasons why understanding the basic principles of insurance is important. Okay, understanding the basic principle of insurance is essential for everyone involved, including insurance companies, agents, and policyholders. Here why it matters. First is building trust. The principle of good faith requires transparency from both policyholders and insurance companies, fostering a trust-based relationship and preventing conflicts. And the second is preventing misuse. The principle of insurable interest ensures that only those with a legitimate financial interest can insure an object, preventing speculative or fraudulent practices. And the third is fair claims. The indemnity principle prevents policyholders from profiting from claims, ensuring compensation aligns with actual losses. The next fourth is third-party responsibility. The principle of subrogation allows insurance companies to pursue liable third parties, maintaining fairness in responsibility for damage. And the fifth is risk sharing. The principle of co-insurance and contribution allow risk sharing among insurance, supporting financial stability in the industry. Okay, for the next is 6, structure claim process. The principle of chronology helps establish claim priorities, streamlining the process and avoiding disputes. And the next is 7 is accurate risk calculation. The law of large numbers help insurers assess risk and set appropriate premiums based on data from numerous policyholders. And the next is 8, identify loss causes. The proximate cause principle determines if a loss is covered by the policy, speeding up the claim process. And the 9 is customer education. Understanding insurance policyholder awareness of their rights and obligations, reduce misunderstandings, and helps them choose products suited to their needs. And the last is 10. Service quality. A good grasp of these principles allows companies to design products that meet policyholder needs, improving service quality and customer satisfaction. Okay, understanding insurance principle fosters a transparent, responsible relationship between companies and policyholders, prevents misuse, and ensures high-quality service. This is essential for maintaining stability and trust in the insurance industry. Okay, thanks for watching. Wassalamualaikum warahmatullahi wabarakatuh.